When it comes to building wealth, the question of whether real estate or stocks is the better investment is something almost every investor has wondered about. Which one really helps you grow your money faster? Real estate offers a tangible asset you can see and touch, while stocks provide flexibility and potential for high returns. But how do they stack up against each other? Which one fits your goals better? This debate has been going on for years, and today we're going to break it down. By the end of this video, you'll have a clearer idea of whether real estate or stocks is the better option for you. Whether you're just starting your investment journey or looking to diversify your portfolio, knowing the pros and cons of each can help you make smarter choices. So if you're curious to find out which investment might work best for your financial future, stick around. And if you're enjoying this content, don't forget to hit that like button and subscribe for more insightful videos and articles. Let's dive in. Real estate, the pros and cons. Real estate has long been considered one of the safest investments. For many people, owning a property is a tangible way to build wealth over time. The idea is simple. You buy a property, make improvements, and either rent it out or sell it for a profit. While this might seem straightforward, there are many factors to consider. How real estate works. When you buy a property, you usually take out a mortgage to help pay for it. As you make your monthly mortgage payments, you start to build equity in the property. This is the part of the property that you actually own. If the value of the property goes up over time, your equity grows too, which can help you build wealth. However, real estate isn't just about the price you pay when you first buy the property. There are other things to consider, like renovations, ongoing costs, and taxes. These factors can all impact how much money you can make from owning the property. So, while the property's value might go up, you need to keep in mind that there are costs along the way that could affect your overall profit. The numbers. Real estate investment example. Let's say you buy a property for $500,000 and put down a $100,000 deposit. You decide to give the place a makeover by renovating the kitchen, bathroom, laundry, and flooring, which costs you another $40,000. After 5 years, you rent the property out for $500 a week, and the property's value goes up to $650,000. But of course, owning property comes with more than just the sale price and rental income. There are a lot of extra costs to keep in mind. When you first bought the property, you paid $17,000 in stamp duty. Over the next 5 years, you paid $93,000 in mortgage interest. You also had to cover $5,000 in maintenance costs and $21,000 for things like strata, water, and council fees. Then, there were property management and insurance fees, which added another $6,500. When you decided to sell, you had to pay $18,000 in selling fees, including commissions and marketing costs. On top of all that, you'll also pay $19,000 in capital gains tax for the profit you made from selling. After considering all of these costs, your net profit from the property would be around $92,000 after 5 years. While that's a decent return, it's important to remember that real estate often requires a long-term commitment. It can be time-consuming when it comes to managing the property and handling maintenance. Pros of investing in real estate. Leverage. With a relatively small deposit, you can control a much larger asset, which means your investment can work harder for you. Physical asset. Real estate is a tangible asset that you can see and manage, which can provide peace of mind. Tax benefits. There are various tax benefits associated with property ownership, including depreciation and deductions on interest payments. Steady cash flow. Rental properties can provide consistent income, helping you build wealth over time. Cons of investing in real estate. High upfront costs. The initial investment, along with stamp duty and renovation costs, can be quite high. Ongoing costs. Interest payments, maintenance, property management fees, and other costs can add up quickly. Market fluctuations. While real estate is generally considered stable, the market can still fluctuate, and property values may not always increase. Time-consuming. Managing a property, dealing with tenants, and handling repairs can be very time-consuming. Stocks. The pros and cons. Stocks are another popular choice for people who want a more flexible and hands-off way to invest. With stocks, you can invest in companies or other financial products without the hassle of managing property or doing renovations. The main idea is to buy stocks when the price is low and sell them when the price goes up, making a profit. Some investors also choose stocks that pay dividends. Dividends are regular payments companies make to their shareholders, giving you a steady cash flow along with the potential for the stock's price to increase over time. This makes stocks an attractive option for those who want a less active investment that can still provide returns. How stocks work. When you invest in stocks, you're buying shares of a company or an index, like the S&P 500. As the company grows and makes more money, the value of your shares goes up. You can also earn income through dividends, which are payments companies make to their shareholders from their profits. One big advantage of stocks over real estate is that they are much more liquid. This means if you need cash quickly, you can sell your shares and get the money in a short time, unlike real estate, where it may take longer to sell a property. This makes stocks a more flexible option if you need access to your money faster. The numbers. Stock market investment example. Let's say instead of investing in real estate, you had invested the same amount of money, $157,000, which includes the $100,000 deposit, $40,000 in renovations, and $17,000 in stamp duty, into the stock market over the past 5 years. Based on the average annual return of 10.15% from the S&P 500, your investment would have grown to $257,000 after 5 years. Additionally, if you had invested the $2,100 per month, the amount you would have spent on the mortgage and other ongoing costs, such as $1,000 per quarter for water and council fees, the total investment would be around $439,000 after 5 years. After accounting for fees such as $390 in brokerage fees and $19,000 in capital gains tax, your final net profit from stocks would be $110,000. Pros of investing in stocks. Ease of access. Stocks are easy to buy and sell, and you can invest with as little as a few $100s. Liquidity. Unlike real estate, stocks are highly liquid. You can access your money quickly by selling your shares. Lower costs. Stock investing generally has lower upfront and ongoing costs compared to real estate. Diversification. With stocks, you can invest in a wide range of companies and industries, reducing risk through diversification. No maintenance. There's no need to worry about property management, repairs, or dealing with tenants. Cons of investing in stocks. Market volatility. The stock market can be volatile, with prices fluctuating frequently. This can be stressful for some investors, especially if they are not experienced. Less tangible. Stocks are intangible, which may not appeal to investors who prefer owning physical assets. Risk of loss. While stocks can provide high returns, they also come with the risk of losing money if the market or a particular stock drops in value. Comparing real estate and stocks, which one wins? After crunching the numbers, it's clear that stocks have the edge when it comes to returns over the past 5 years. In our example, the stock investment outperformed the real estate investment by $17,000, despite the higher costs associated with buying and managing a property. However, real estate offers unique advantages that stocks can't match. Real estate can provide steady cash flow through rental income, and the ability to leverage your money can lead to larger returns over time. Additionally, owning a physical asset can provide a sense of security that stocks may not offer. Long-term perspective. Real estate versus stocks. While stocks have outperformed real estate in this example, it's important to take a long-term perspective. Over a 30-year period, real estate could deliver strong returns due to the accumulation of equity and appreciation in property value. Additionally, real estate can provide a hedge against inflation, as property values and rental income tend to rise over time. On the other hand, the stock market can provide faster liquidity and lower upfront costs, making it an attractive option for those seeking flexibility and growth. With a well-diversified portfolio, stocks can also provide consistent returns over time. Finding the right investment strategy for you. Ultimately, the choice between real estate and stocks comes down to your personal financial goals and risk tolerance. If you're looking for a more hands-on investment with the potential for steady cash flow and long-term growth, real estate might be a good fit. However, if you're looking for flexibility, lower costs, and the ability to easily access your money, stocks could be the better choice. You don't necessarily have to choose one over the other. Many investors find success by diversifying their portfolios, splitting their investments between both real estate and stocks. This way, you can take advantage of the benefits of both worlds while minimizing risk. Final thoughts. So, which is the better investment, real estate or stocks? Both have their pros and cons, and the right choice really comes down to your personal goals and preferences. In our example, stocks showed higher returns over the past 5 years, but that doesn't mean real estate isn't a good option. If you like the idea of owning a physical asset and earning passive income from rent, real estate could be a great fit for you. At the end of the day, it all comes down to what works best for your financial goals and risk tolerance. Whether you decide on real estate, stocks, or a mix of both, the most important thing is to make well-informed decisions and focus on long-term growth. What do you think about investing in real estate versus stocks? Do you lean towards one, or do you prefer having both in your portfolio? I'd love to hear your thoughts, so share your experiences in the comments below. If you found this helpful, don't forget to like this video and subscribe for more content like this. Thanks for reading and happy investing.